Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about a very important catalyst happening tomorrow for the stock market. This catalyst is so big, it could quite possibly determine the direction of the stock market for the rest of 2022. So it's definitely something that we want to pay attention to, and I'll be breaking it down in today's video. But first of all, if you guys are new here or returning and not yet subscribed, I would greatly appreciate that subscribe button down below. Also, feel free to hit the like button. It helps push my videos to a broader audience, and I thank you in advance for that. Without further ado, let's go ahead and jump into this. So about a month and a half ago, I made a very similar video to the one I'm making here today, where I predicted that the stock market would find its bottom on May 11th. And if we go to the stock chart of small caps, we can see that the bottom was found on May 11th, and from May 11th up until today, small caps are up 7.6%. The S&P 500 is very, very similar. From May 11th until today, the S&P 500 is up about 2.2%, and the NASDAQ is no different. From May 11th up until today, the NASDAQ's up about 2.6%. So what exactly happened on May 11th that made it so obvious to me that the stock market would find its bottom on that specific day? Well, on May 11th, we got CPI data, inflation data for the month of April, year over year. And I went into this figuring that inflation would show that it had cooled off in the month of April compared to the month of March. Fortunately, I was very correct about that as well. In the month of March, CPI data showed an inflation rate of 8.5% year over year. And in the month of April, although still very, very high, still way too high, it showed that inflation had started to cool off. We only got 8.3% inflation year over year versus the 8.5% inflation year over year we got for the month of March. Now, tomorrow we get the CPI data release for the month of May. And you can kind of piece together why this might be extremely beneficial or detrimental to the overall stock market. I see it all over YouTube and social media. All of these technical analysts or these technical analysis gurus predicting the markets either going up or down, etc. But let me tell you straight right here, this is much more simple than any TA will tell you, and this is also much more simple than most investors think right now. Inflation is everything for the stock market. Technical analysts have to put out new TA every single day. You want to know why that is? It's because their technical analysis is wrong every single day. So they have to keep updating it and updating it and updating it day after day after day. The thing with technical analysis is you can get it to tell you whatever you want it to tell you. You can look at any chart and say, oh, this is bullish. Or you can look at that same chart and say, oh, this is bearish. The fact of the matter is technical analysis doesn't matter near as much as people think. And I know that's not the point of this video, but it's something I wanted to cover briefly. The reason I say inflation is everything for the stock market is not only because the stock market found its bottom on May 11th, which was the most recent CPI data we got, but it's also because inflation directly impacts consumers. It directly impacts businesses. It directly impacts what the Federal Reserve is going to do with people and citizens. If inflation keeps running away and wages don't keep up with that inflation, it leaves consumers with less discretionary income, less money to spend at a restaurant or a movie theater, or to go take a vacation and spend money on that. There's less money available for consumers if inflation runs away. It's bad for the economy. It can impact businesses via supply chain constraints, via either having to hold on to the cost pressures or being forced to push those pressures onto the consumer, which again hurts the consumer. For the Federal Reserve, it impacts them directly because if inflation keeps going up and accelerating, they're going to be forced to raise rates, which is going to hurt the economy because it's less easy for consumers and businesses to take out loans and to afford loans, to buy new inventory, to buy a new car, to take out a mortgage, etc. But if inflation cools off, the Federal Reserve won't be forced to raise rates and might even be forced to cut rates, which stimulates the economy. This is why inflation matters the most out of anything you look at. People out there are looking at TA, like I've already mentioned. They're also trying to find other catalysts that might move the markets, but it's very simple. We need to look at inflation to determine the overall direction of the stock market, which is why tomorrow is such a big deal. As it sits right now, economists are anticipating 8.2% inflation year over year for the month of May, which, if we look at this, clearly is less than last month, which would show that inflation is still cooling off. But there's kind of a couple of caveats here to this. First of all, the markets want to see inflation cooling off much more than 0.1% month over month. We want to see whole percentage declines in the inflation rate. And obviously, it's not anticipated that that is going to happen tomorrow when the CPI data comes out. And the reason for that is because, I'm sure you've noticed it, energy and food prices, specifically energy, has skyrocketed over the past month. If we even just go to a simple chart of oil prices over the past month, we can see that at the beginning of May, the price of WTI crude oil was below $100 per barrel. However, towards the end of this month, crude oil topped $120 per barrel, which is 20% inflation in the price of oil. That is drastic, and that is going to definitely impact the CPI data tomorrow. Now, the Fed's preferred method of looking at inflation is not the CPI data that's coming out tomorrow. They actually prefer to look at core PCE data, which strips away food prices and energy prices. That is what the Fed is basing their decisions off of. We fully anticipate the core PCE data to show inflation cooling off drastically year over year. However, again, what matters most to the markets is the CPI data, not the core PCE data, because what directly impacts the economy is everything. Energy prices, food prices, you name it. Everything impacts the economy. And although the Fed's decision making also plays a part in the direction of the markets, it is vastly determined by the CPI data, as I've already established in this video. So tomorrow, what we want to see, obviously, is inflation to continue to cool off. Anything less than last month's 8.3% is going to be viewed as okay or bullish, depending on how much lower than the 8.3% we come in at. For example, if it comes in and we're flat month over month, 8.3% inflation, I would anticipate the market staying flat and kind of remaining choppy like we've been recently, at least until energy prices cool off, if they do at all during this upcoming month. However, if CPI data comes in at 8.1% or less, I think that's going to be viewed as very bullish, and that might be the next leg up in the stock market if that happens. That would be viewed as extremely bullish. And obviously, this is common sense, but if inflation reaccelerates above 8.3% in the month of May, that is going to be doomsday, and I fully anticipate the possibility that the markets could fall right back down to the May 11th lows that they hit before that CPI data was released. This is all a moving target, which adds uncertainty to the stock market, and we all know the stock market hates uncertainty. And that is one thing that is going to benefit the markets no matter what happens tomorrow. The markets are going to get some sort of certainty. If we can clear out any uncertainty and get some sort of certainty, that is going to provide some sort of bullish momentum over the long term. Maybe not immediately, because if inflation beats expectations in a bad way to the upside, obviously the market's going to be in pain. But after the markets adjust and price that in, that kind of gets rid of that uncertainty, at least up until the next CPI data release for the month of June. So let me know down in the comment section below what you expect CPI data to come in at, and also let me know if you think the stock market is going to react in a positive or a negative way. But with that, I hope you really enjoyed this video. If you did, feel free to hit that like button down below. Again, if you guys are new here or returning and not yet subscribed, I would greatly appreciate that subscribe button also. With that, have a great rest of your day, stay blessed, and peace out.